Hello again, everybody. It's Harry Boxer, the technical trader at thetechtrader.com. It's Saturday morning, October the 28th. This is the weekend webinar. Well, we've certainly had an important week in the market, and they are at some pretty critical levels here. Let's show you what I'm talking about. After a big 1, 2, 3, 4, and a massive fifth wave that was 1, 2, 3, 4, 5, in my opinion, we had a fifth of a fifth, and the market came down in a 5-wave decline. 1, 2, 3, 4, and this is long decline. This recent decline is a fifth wave down to a support zone that created in the April-May period. If they break here, and you don't know how far market's going to go, it always goes further than you think it's going to go, but we're on the precipice of a possible sharp spike down decline that could reach all the way down to 3,800. Now, I'm not saying we're going there. All I'm saying that if we don't hold the I would say 44,000 and 45.50 range, then we could plunge because there's a lot of room, like a vacuum, for this market to be sucked into. But that's just my theory. If the market rallies and we could plunge into that support and then rally back, then you're going to have some key resistance around 4,200 and then 4,300. Beyond that is 4,390, which may be difficult to get through. But if we do get through this declining top sign and the 50-day moving average, then you're looking at over 43.55, 65, much bigger move in the market potentially. But it's hard to envision that right now, isn't it? At least we see the 5-wave decline and a possible bottoming, short-term bottom like we had there or there, which resulted in a few days of rallying or even as much as a couple of weeks. Don't forget, Wednesday is FOMC day, and they may raise or may not raise. I think they're not going to, but if they, either way, the market could either plunge or rally into that level and then back off and then go. It's going to be wild and crazy week, folks. I also want to make an announcement that I am moving physically on Tuesday, and only will be there pre-market and early on, because then I'm going to be in my moving phase the rest of that day. So I'll be gone Tuesday, and I hope it's not the bottoming day, because it will be kind of a critical day. My apologies for my timing. Nothing I can do on that. Now let's look at NASDAQ. NASDAQ 100 generals. I just looked at, by the way, the Vanguard fund, which is a leading tech fund that has 40% of their fund in Apple, Microsoft, NVIDIA, and I think Google or one of the other big ones. In any case, so these funds are going to get hammered as well, but at the same time, that may be an indicator of how the market does. Because I think the market's going to be led back by the big boys, certainly not the little stocks. So you can see the NASDAQ's also had a 1, 2, 3, 4, 5-wave decline to a support level from June, but there's room to drop into this support level down in the 13.46 zone. And if it does it quickly, if in other words you're down 300, 400, 500 points on a spike down, you may very well get a quick snapback. The problem is, what does it do at that point? NASDAQ had a nice basing pattern here and did a long, if we can call this a 1, 2, 3, 4, a big fifth wave as well. I'm not an LA wave expert, but enough to be dangerous, and I think that obviously the trends have been broken, the channels have been broken, the lateral price support is broken. So how far down can I take this? Quite a bit. Market always goes further than you think it's going to. Be defensive. This is the time to be defensive and make sure you're hit and running and not staying too long in anything, because you never know how they can treat your stock long and short. Now, obviously, my job is to find the stocks that are running either way. I love to trade the ultra short ETFs like your SQQQs and SOSX and TZA and LIBD and those types, instead of trying to find individual stuff. But there are opportunities every day, and I've given you them in the trading room. So there's your NDX. And now, if you think that's bad, look at the transportation, leading the market lower, seriously, plunging last week, every day. Matter of fact, 6 of the last 7 days, this is plunged, including a gap down a week before last. We went from 15,200 to 13,471. So we lost 1,800 points on it, or about 13% just 2 weeks on the transportation index, and now down in an area that a year ago multiple times held support. So another reason that the markets could rally back, because we're so extremely oversold. If they don't, there's a possibility the extension takes you under 13,000 here. That could get very ugly, but it's extremely oversold. Small caps, not good either. We are now at the June, October of 22, multiple lows and slightly below that even. This is actually the lowest level. We tagged slightly lower on Friday of 163.20. That hasn't been seen since about November of 20. That's a 3-year low in small cap stocks. Just when it looked like they were having a beautiful base and about to break out there, 1, 2, 3, 4, 5 waves down. So we have a nasty looking 5-wave decline to a triple bottom support. You can see how you would think there's support here, and this is stretched to the downside on the 5th wave, which could release it back up and spike up. I wouldn't be shocked if the market either spiked down or up on Monday morning. What I'd like to see is a breakdown of all support levels quickly, throw the baby out the bathwater, negative tick of 14, 15, 1600, and a McClellan oscillator that's much deeper than where it is now, which closed, I think, at minus 97. I want to see much worse than that, double that at least. So if we can get the VIX up, the oscillator down, and the trend, a big negative tick, that's where I think we can turn it. And I'm not sure if that's happening Monday, Tuesday, or it's going to have to wait till Wednesday when the FOMC makes their decision about interest rates. So lots could happen next week, but I do think we're going to see a pretty strong 2 to 4 week year-end rally. That's my take. Okay, so you've seen the indices. Now let's take a look at the underlying indicators we just talked about. The McClellan oscillator, which got up to plus 124, and that was just on October the 17th, 11 days ago. It's moved down to, it got down to minus 130 before bouncing, and it closed at 97, minus 97. It was down 35 points just on Friday alone. So we could quickly get down to this minus 150, 200 zone that I'm seeking before we get a big market turn. So maybe another day or two. Hard to say, of course, but you got to take what the market gives you, right? The VIX, as you can see, actually hit 23, first time since March. But look how many times in the last couple of years we got up into the 30s and almost reached 40. And historically, at the 2020 low, which is really an outlier, 69.50, pretty amazing. You remember what the UVXY did then? Well, we may see that kind of spike up in the UVXY the next day or two. So keep an eye on that thing. Also want to show you that percentage of stocks above their 40, as little as a week and a half ago, it was 37%. It closed at under 15%. Only twice in the last year did we get this low. We actually got down as low as 12 here, 12 and change, and same here, both in the 12s. We're at 1493. You could easily get there Monday, or worse, a spike down into the high single digits. But I think we're getting close. All right, now we'll look at the major ETFs we follow. The SMH, massive 1, 2, and looks like a 3, 4, 5. We've also had a 5-wave decline. However, you can see that the gap here and the spike here is a support level that we reach on a 5th wave. If we don't hold there, we might see 130.31. That would coincide with what I foresee as a possible spike down. So next 2 days are going to be critical, I think. That's the semiconductors. What about biotechs? Well, not pretty. XBI is at the lowest level also since back here in the double bottom range. So we're getting closer to retesting that level as well. And it's plunged, folks, from 81 to 64 in the last couple of months. Financials, terrible, with as you might expect with interest rates. As a matter of fact, we got down to, hold on a moment. Yeah, we reached 48.73 in the 5-wave decline from July when it was 74. The prior low in March was 48.86. So kind of really important support here that if broken could lead to a plunge towards the mid 30s. This could be nasty for the banks. We'll have to just see what happens on a key support level, that's for sure. So there's a look at the top 3 ETFs for the groups I follow: semiconductors, biotech, and financials. Not a pretty picture, but one more look. Here's financials, biotech, all three at support, with the semiconductors obviously at a much higher level, having come down, but in a very orderly fashion. Now we'll look at some other of the major ETFs we follow. Oil, USO in a very strong pattern and wedging here. I want to point out that this is a large 1, 2, 3, and this is a wave 4 wedge. And if it goes, we might see 92.3, which means your oil will probably be over 100. It's maybe more. It's not a given. I'm only telling you the possibilities. I do want you to stop USO under 75, 75 and a half. That's where it may reverse. The JNUG and NUGT looks similar, but different, way different. It's a V bottom with a right hand extension, and NUGT the same thing. Also want to point out a left shoulder head and a right shoulder forming. So are we at what could be an important bottoming pattern developing in gold and gold stocks? You betcha. V bottom right hand extension on GDX, NUGT, et cetera, et cetera. Good. So keep an eye on GDX. You want to be long over 30. That's where I think you can go to 33, 36 and more. So individually, some gold stocks might look good, and we'll go over a few a little later on. Silver just doesn't look as good, but it does have the V bottom and right hand extension. I just looked at a lot of the individual stuff, like Pan American Silver, just not impressive, folks. So I say stick with the gold for now until the silver shows me better technicals. Gas, well, Boyle, beautiful base, but look at that reversal on Friday, nasty. At the same time, the bear ETF, KOLD, also double bottom and reverse. So kind of we have to see if there's follow through in that area. I like oil better than gas right now. So we went over oil, gas, gold, silver, and those are the chief commodities we follow. Of course, there's many others. We have a lot of stocks to cover, not as many as normal on the long side, and I have a bunch of shorts to show you. Let's start with ACXP. Now, after an explosive move, so this stock go from $1.17 at the blow to almost 9, an 8-fold increase of sorts. Okay, 8-fold in about a week and a half. You're going to get these consolidations, aren't you? Well, it's a nice wedge that did pop out last week. But keep an eye on this one. Your key resistance is 665 and then 885. Don't know if we get to either, but I wanted to show you the chart. It's extremely intriguing to me with really good technicals. And that would be a biotech stock, ACXP. AEHR, one of our favorite trading vehicles, and 3 times a swing and a successful one, finally has broken down. He broke down here and snapped back to fill the gap. And that was it. Rolled over hard, could not even get back above resistance. And now you can see the low on Friday, 29.36. That's the lowest level we've seen on this stock since back in May. And if it's broken the trend, it might see lower levels. Don't be shocked if the market tanks or spikes down and this gets into the 24.5 range, at which point I think it is a good buy. AEO, some of the retailers still phenomenal, even though this backed off Friday. What a nice chart for American Eagle Outfitters. Beautiful base. AI. So folks, some of our favorite market trading vehicles like AEHR, AI, Carvana, etc., all look pretty dire here. Take a look at AI. I've been talking about a trend break for 2 months now. It did consolidate, and it is, wedging or flagging in here, or let's call it, but it looks to me like if it isn't a base, it's a bear flag. And if it cracks support under 23.30, you might see a 19.20. The reason I'm showing you ALHC is because when it popped out, I gave you a swing on it, but it backed right off in this market. Nevertheless, you can't ignore beautiful base breakout and with a big gap too. So watch this one carefully because it's right on support here, and any further damage, it must be stopped, and we can revisit it later. How about ANF? Talk about strong retailers. 13 to 60, 300%, 64.85 actually. Currently 58 and change, and still in a very strong trend. Now, I don't know if they're going to last if the market tanks, but I will tell you this, long-term, my target's 80 to 85. ANIP in the biotech sector, Beautiful rising channel. Basically 22 to 65 in the last year and a half. And now a falling wedge that popped out Thursday. Keep an eye on this one. The target is 70, 72. APLS swing. We put it on here. It worked out to the target. Came down to a falling wedge and popped right back. And then consolidated in the coil. And it's bubbling under. It's got to get over 51.5 too. If it does, 60 and 70 might be targets. APLT. Beautiful long-term pattern. Exploded here, falling wedge, pop, double top, pull back, retested. Again, wedge and broke out. Now this wedge here broke out, it pulled back and popped, it pulled back again on Friday, but it looks like it's got that angle of ascent that could get you to 4.5 at some point, which is a substantial move from where we are. Now gold stock AU, again, this is a 1, 2, 3, 4, 5 wave decline. Left-handed extended V, a pop and a platform. I love this chart. If I'm buying a gold stock, I want to see this over 1990-20. Then I'm looking for 22.5 and 25, just for starters. Long term, love the way this is reversed and broken this channel. Moving averages are crossing over and it's consolidating above the moving averages. Very bullish scenario. BBIO, I'm only showing you this one. Look, it hasn't done anything since July, but what a move it had. 1, 2, 3. This could be a long wave 4 falling wedge. If there is a fifth wave, look what this projects to. 58.60, double. I'm not saying it's going there, but I am saying it should break out with energy. You might see 29.30 and even mid-30s for starters. BRBR, this food company is phenomenal in this market, and it's flagging right in here, or wedging. I keep hearing takeover in the 50s. CBAY, how about this little junior biotech? Long 1, 2, 3, 4, 5 wave move. And now this. Don't know if it's able to make further headway, but 18 and 22 are targets if it does expand this channel. CCJ, well, uranium stocks in general were positive, but this one came down and now it's formed what looks like a bear flag. As long as it holds the trend line, it's not a bear flag until it breaks. But if it does, you might see this in the low 30s, high 20s. CDLX, a beautiful rising pattern. 1, 2, and then a 1, 2, 3, 4, 5 for wave 3. And this is a corrective wave 4, I think. If we get any kind of rally in the market, and this sustained support, which right now is right about, I'd have to say 10 3/4, 11. Your targets are going to be high teens and mid 20s, but make sure you stop this under 10.8511. CECO, beautiful long-term rising channel, and now in a consolidation on the platform and right above the moving average. So should it hold 15, I'm good with it. My next target is 18.5. CMTI, after a long, year-long falling wedge, it exploded on a breakaway gap a week and a half, 2 weeks ago, and now it's in a rising channel. In this market, outstanding action. 12.5, 14 targets going forward. Look at the pop on Friday, it allows the market on COUR. Exploding, well, it didn't explode because it closed poorly. If you're getting all the way up to 1998, it finished down at 1727 and was only up 9 cents, but it's something to watch because of the overall channel pattern held support. Your stop's under 16.5. CRNX exploded. You remember this one in September, flagged. We put a swing on it, it pulled down, popped up. It's still consolidating. I need to move over 31. If so, 37 is your target. Support 25. Carvana is another one of those popular trading stocks like AI and AEHR that is looking dire here. It broke support and their stop was under 33. It's currently 28.5, and if it doesn't hold it here, my next support is 21. No kidding. It might do it. Electronics, what a beautiful, thinly traded, tight channel. Next target, 12 if it does it. Stop under 8.5. DELL exploded on great earnings in September. It's been consolidating ever since, but doing a yeoman's job of hanging in there in the lousy market. For a tech stock, ultimately I can see 80. DraftKings, one of our tech trader swings from way back in here, I believe it was, might have been there. But anyway, they moved up nicely to my targets. And now for the last couple, 3 months, they've been just consolidating, trying to hold support right in that zone. Trend line's there too. And it needs to hold this or it can crack. Stop under 25, 5.5. Targets of 30 and 34. BRS, this aerospace company, had a beautiful rising channel, and although it pulled back and had an engulfing bearish day on Friday, something to be, consider. Make sure you don't let this get under 17.5. DVAX, a beautiful biotech chart. Nice rising channel, pull back, it popped and pull back again, and now it's consolidating in this zone. Your stop's under 13, your buy stop's over 15, your target's 17. EDU, Chinese educational stocks like this and TAL have been doing great, making new multi-year highs, almost 70. It's the highest level in about 2.5 years. And if it gets through this zone, we might see 100 or better. But stop is under 58. EGO, a junior gold stock that really acting well, and Friday in particular had a nice pop up 86 cents, almost 9%. Keep an eye on this one. That could outperform the gold stocks when they run. That's EGO. EPIX, long coil, explosive breakout, pullback retest, and spike up on Friday. So this overall pattern is constructive, very bullish. And should it get up through the high here, taking out, say, 5, it could run to the 6-7 zone. Keep your eye on this one. FNGR, phenomenal action for a low price stock. Went from basically 1 to 8 back down, then went to 7 back down, then went to 8 and change. But overall, over the last 4 months, it's a slightly rising channel and currently in a wedge. Long term, I'm still looking for 10, 12, and 14 or more. We'll see. I would stop though underneath 4.5. FRO, phenomenal chart. New high on Friday is the highest level since 2012. That's a 10, 11-year high. And the momentum is phenomenal. I would look for 24.5. FTI in the oil sector, oil and gas equipment, just a great looking chart. Broke out Thursday, it extended Friday and backed off, but now I can see high 20s. GBTC in the crypto realm, what a move off. This year alone, this has gone from 7 to 26 in a 1, 2, 3, 4, 5-way move, then consolidated. Now it's moved out again. Target 33. Geo, a tech trader current swing, but held support and broke out, tagged a new high. 927 was tagged on Thursday, but it backed off Friday. I still think 10 and 12 maybe in the cards. GOLD, well, there's a good looking gold stock for you. Barrick. V bottom, a beautiful run up to the neckline, and then a pullback to the shoulder line. It appears this is setting up for a breakout and a run to 18. GPRC, major breakaway gap and wedge. That looks so good then. That was at 52. And it's made its way to Friday's high of 73.50. Very strong relative strength. Target 81. HNRG, look at these coal stocks. Phenomenal. 55 cents to $15 in 3 years. But more importantly, broke out of a coil in August in this 8.5 range, and it's almost doubled, tagging 15.79 before the pullback. Target is 18 and 22. HPK, oil stock, acting great and flagging in this sector. Target is 20. HRTG, low priced property casualty insurance company. What a beautiful run. $1.15 to almost 7. And now the pullback, but the rising channel tells me this isn't done yet. 7 and 8 targets. IBRX exploded this week from $1.25. Friday's high at 273, 150%. And with strong volume like that, you may see higher levels, 3.25 or half as your initial target. IMVT, great looking biotech stock. That's one of my, I believe, picks for the year, but it popped big time on drug news about a month ago and then pulled back. It's coiling, as you can see. Target is 44. Katos, amazing little aerospace company, lots of stuff going on. It went from 9 to 18, doubling, and it's got a flag set up. Target 20 and 22. LFMD, current tech trader swing, big run up, coil broke out, consolidated, popped, and it's consolidating again. My target 10 3/4, 11. What a move by LIAN in the last week. Take a look at this. 137 to 428 in just a week. Very strong. It may need to pull back and consolidate, but my eventual target is 6. Logitech, big breakout on Tuesday. We put a swing on it. Like the way this looks. 80 and 88 are targets. LPG, again, any oil sector stock Most of them doing well. This one's phenomenal. 13 to 32 in the last year. My target for an extension is 37.8. LRN, another educational stock, broke out. Looks like it could run and extend to 57.8. Las Vegas is a short. Get to that later. METC, yet another cold stock with a pop wedge. There may be one more in it, but I'm not sure they can call this a 1, 2, 3, 4, 5 or not. Anyway, it may need to consolidate, but it's got a beautiful base and it's in the right sector. Coal. Minnesota with a nice breakaway gap, a beautiful wedge, no brainer buy there at 10. It went up to 29. It's flagging yet again. I can see 34. MNTS, terrible chart until a month ago when it exploded, went up for like 8 days in a row. Now it's flagging. Keep an eye on this one if it holds. We don't want another 250.60, but your target might be 6 and 7.5. MOR, after a beautiful run up and a pullback to test the key support, this is run right back to resistance. Keep an eye on this one. Target is 8 3/4 and 10. MRAM. This biotech has been consolidating for 3-4 months after a big run up, but holding up very nicely. But if it does get through 10.5, I'd be looking for 12. MTRX matrix pop broke out a flag. That was a buy signal right there at threat 7 3/4, and subsequently made it to 12.98. It's pulled back now, but keep an eye on it for extension 15. In AT, some of the shipping stocks have done great. This one broke out of a 8-month coil with a big move last week that went vertical. This rising channel, the target now is 7. Oil and gas stock NGL, after a big run up and wedge, popped out and now it's flagging or coiling. Once it gets around 4.5, my target is 5.5, 6. And then with a beautiful pop of a base, wedge pop, and now a long flag, I have 6 and 7.5 as targets if it pops. And you can keep the stop under here on the 4 1/4. Nutanix, one of our swings, did great, popped out, pulled back and tested, ran up sharply to my target, and pulled back in a falling wedge to the moving average. If it holds this level, we might see the stock at 40 or 42. Olema, that's another beautiful biotech, broke out of a base, pulled back to retest, consolidated and popped out, and consolidated and pulled back and tested. And now look where it is, right at the high for the year. My target is 18. PAY breaks out of a base with a breakaway gap, wedges, pops, it's wedging or coiling again. My targets are 17 and 19. Pinduoduo, one of the strongest Chinese stocks out there, making new highs. This is the highest level in 2 years. Might see an extension to the mid 120s. Palantir, breakaway gap, strong run up to my target, pulls back in a falling wedge or coil, breaks out and pulls back to retest again. Overall, consolidating bullishly, but you don't want this one under 13. Powell popped up and pulled back. We put a swing on it. It really never got going, but it did consolidate bullishly. However, in the last week and a half, it's broken the channel. And it's right at key gap support. Further damage, you might see 64. I'm staying long until that breaks. Tight stop. PRDO, another educational stock with a breakaway gap and a rising channel. I can see 1920. Quick. Junior Semiconductor acting very well while some of the others aren't. After a spike up run that saw it go from 5 to 10 nearly, pull back, large multi-month wedge broke out, and then we pull back again. The current mini wedge there, if it breaks, could run to 11 and 12. Rely, a Remedy Global, what a beautiful chart. 8.5 to 28, 300% move in less than a year, targeting now 31. SFM, that's Sprouts Farmers Markets. Beautiful channel. Look at this making new highs here. Pretty amazing stuff. Where can it extend to? Mid to high 40s. Solano, major breakaway gap and a large month-long coil. Don't know if it's going to break out. If it does, high 30s is your target. Smith & Wesson broke out. We put a swing and retested and popped. Pulled back Friday. I still like 16, 17, maybe 19. TAL, educational stock, got up to the high from last year and backed off. Your support, 8.5. CDW, It's Tidewater, phenomenal oil stock. It went from 9 to 70, 9 to 73. Pretty amazing move. There's a triple top there, but it does look like an ascending bull coil. If it gets through here, 88 is your target. TNK, that's TK Tankers, breaking out of a 8-9 month base pattern. This one could run high 50s, low 60s. TPST, huge move that one day, as you know, and now a perfect falling wedge. Don't let it get underneath 3.5. That's my stop, 335, something like that. But if it pops 7, 8, 9, it could be doable. TRMD, and yet another stock in the oil and gas sector, breaks out of a base and is trending. My target is 36.7. Tektronix broke out. I think it broke out there. We put a swing on it. And then backed off and tested, popped, made a new high, backed off and tested, had a negative reversal. Look, it's still in a consolidation zone, and until it breaks, we're still long, but it's not pretty. And it's got to break 73.5 for me to say exit stage left. If it does go, retesting 80 is my initial target. UEC, well, this is a little junior uranium stock that has designs, I think, on 6.5 and 7.5. And it's in a beautiful rising parallel channel. USAC, another stock in the oil and gas group, broke out, pulled back, popped, has a kind of a wedge now, targeting 27.5. Another one, Vista Oil and Gas, amazing move the last couple of years, 2 to 29. Wouldn't be surprised to see low to mid 30s. VRT, pretty negative reversal day Friday, and it's come down to test the trend line. Any further damage underneath 34, 4.5, I would exit. If it does rally back, 41 and 45 are your targets. Wave pulled back on Friday. It's still within the confines of support and a wedge or coil. It's moving up slowly but surely over the last few months. The projection is now 6 3/4, 7.5. U.S. Steel, I still believe it's a takeover. And look at the way it's acting. Friday was up 3.3% and closed at a new closing high. My target 35 3/4 and 39.40. XPEV, the only Chinese EV manufacturer I'm still watching closely. I like the way it popped off support, but it's in a declining pattern. Needs to take out key levels of about 16 and really get this one going. And finally, and alongside Zixi, had a big pop on Friday. We put a swing on it. I believe that if it gets above 8 3/4, you're going to see 10.5, 11, maybe as high as 13 or 14 over the next weeks and months. Now we'll look at a bunch of shorts that I want you to consider, or at least want to review with you from prior recommendations. Recently added ACLS, broke that platform down to secondary support. A lot of room to drop, folks. This might be down to 110 or another 28 points if it breaks where it is. AMPH, also in a 1, 2, 3, 4 long bear flag. If it breaks, you might see 38, 39. AMR, head and shoulder top breakdown, retested neckline, and then rolled back right to support. Any further damage here, there's a lot of room to drop. Wouldn't be surprised to see 190 or even less, currently 220. We'll see what happens there. AN came down from the big bear flag, rolled down again, bounced, and again bounced. AutoNation had a big negative reversal Friday, and I'm now looking for a move to test 122. Belden hammered, snapped back to resistance, dropped off hard again. It's pretty short-term oversold, but if it backs and forth a little more, you might see it fall apart. Builders first source, with housing stocks not doing well, the building supply stocks are starting to fade. This one with a monster move that saw go from 49 to 159, dropped down from the bear flag, at which point we told you that it looks dangerous. And look where it's going. The gap is 100, the gap fill is about 95. BMEA came down from the bear flag, at which point we were giving you a direction on shorting at 22. It's now down in half, near 10. CAMT finally broke and from the bear flag. This should be a tech trader swing short. It looks bad. 44 and 40 are my next targets. Cocoa Vita, right on the precipice of a breakdown and a head and shoulder type top. If it does break, I can see a quick drop down at 20, and then below that, 17. South American airline Copa Holdings, after breaking down and snapping back to resistance, has just dropped away, continues to drop. Next target, 74. Crocs, a tech trader swing short around 104, I believe it was. It dropped down to 82 3/4 and it's forming another bear flag. Next target, 78.75. Builder DHI, downward channel, and still dropping with a target of 94. VOX broke from the rising bear wedge. It faded hard from 89.90. It's dropped to 77. Near support, so you may bounce in here. ETN, head and shoulder top breakdown and a collapsing type pattern that I think heads to 182, maybe much lower. EXP dropped down from the bear wedge and then fell over hard from 172 to 145 with a target of 137. Tech traded swing short FOUR came down, bear wedge, and then rolled over hard from 56.7 all the way down to 42.3. My current target, 37.8. GMS breaks the trend line, rallies back, fades, and you can see broke support is in the down channel that could lead to 50.52. GRBK, tech traded swing short after a broke and snap back. It dropped from the high 40s to the high 30s and doesn't look done yet. HCA, hidden shoulder type top breakdown, and then stair stepped its way lower. Finally got smacked early in the week before bouncing. Probably would have covered on that smackdown, but it might see lower levels yet to 210 and even down at 180. HOLX, head and shoulder top breakdown, bear wedge. That's a no-brainer right there at 75 short. 65 currently, target 60. HUBS, head and shoulder top breakdown, and down she goes. Next target is 395 and then 365. INTT, tech traded swing short, came down, broke from the bear flag. We went short around 21. It's dropped down to 12 and change. Still looks bad. Builder KBH broke its trend line from the bear flag, at which point we said short at 46, holding 42. Not as bearish as the others, but in a very distinct downtrend. Las Vegas, hidden shoulder top breakdown, little bear flag, a larger one. If it fades here, target's 41. LW, tech traded swing short, dropped down from the bear flag, dropped down from another one. Spiked up in earnings and then got hammered and has a rising wedge. I don't think it's done yet. I can see 75. MEDP might have formed a head and shoulder spike and then spike down. I think it can be down to 200 for a test. NVT, head and shoulder top, breakdown to support. If it bounces, my next target is 43 and 40. OMC, topping pattern, broken, little bear flag, another one. Look at the bottom, potential is 62. Service Corp International SCI, massive rollover top, broke, target 46. DGR has been on my short list since it broke down from the bear wedge at 39, currently 21. Cover my shorts. It's MCI, massive top forming, looks like NVIDIA. If it breaks here, we can plunge to 200. SSD breaks this channel, it comes straight down. Lower levels, 112, 115 zone. Look at this SVXY. This is the opposite of the UVXY. And shoulder top. Broke the neckline. Probably back to it. Back down to lateral support. This thing breaks down. You can see the stock in the high 60s. Technoglass. Big run up. Snapback. Falling wedge. If it breaks here, 26.7 target zone. The NDX broke its channel. Big time. Rallied back. Faded from the little bear flag right there. That's where he went short. 59, dropped to 37, and still falling. Alta. Look, I was going to short this up here, but decided not to. But I mean, that was my mistake. But when it formed that bear wedge at 419, we went short. Dropped to 368, and it's still in a downtrend. My target, 335. And folks, that is it. A review of the longs, the shorts, the indices, the underlying technicals, the ETFs, the long, and then a complete review of everything you'll need to know for next week. It's going to be a rough one, folks. Fasten your seatbelts. And a volatile one. For now, HB out. Enjoy the rest of your weekend. Please review this. This is important. I'll talk to you later. Bye-bye.